What's going on, ladies and gentlemen? Welcome. It's Tuesday, 124, 124.23. It's 1:15 p.m. Eastern Standard Time. Now, today we're going to go over some charts because, I'm always obviously trying to figure out what's happening in the market and make sense of things. And I figured I went back into just the 2017 bull peak and the bear market thereafter. And basically I'm trying to make some sense as to where we are and what might be happening. And I think, I have a general understanding, although there are some significant differences between the two. And if you look there, these tabs are so big. I need to make these smaller so it's easier to see the actual price action. But, you can see here, we've been going down and we've been under the 200 moving average pretty much the majority of the time. And we've recently broke above it, closed above it on a daily. Right now, we haven't necessarily, I don't think we've done that on the weekly yet. We've got a ways to go. We're getting there, but we're not quite there yet. Okay. So on a weekly chart, we have not yet closed above the 200 weekly. And then even after that, if we were to close above it, I would expect to see us continue rising from there. But there's a good chance that we could move above it, come back down, bounce off of it, and then correct, okay? And then come down further, which I think is very possible right now, even though a lot of the stars are aligning to say we're going to see more bullish momentum than we are bearish. But I was looking back and I'm trying to figure out, okay, what did 2017 do? Now, obviously, it's always different, okay? There are always significant variables to this that can change on a dime. But ultimately, I wanted to get an idea as to what we might be looking at. And so if I pull up 2017, we can see we had the peak. And the first time we went under the 200 weekly on a daily, it took about 128 days. And well, not broke under. We did that quite earlier, but basically bounced under it and then continued down a little bit, bounced again, and then went down a lot further. So we got kind of a double bounce off of the 200 moving average. And then we continue further down, and then we bounced off of it again and came further down, bounced off of it again. And then we went sideways for a while until we really came down. All right. Now, if we look at the price though, when we bottomed in December and then we rose back up. And when we rose up, the whole process is about 9 days after the bottom. All right. So we bottomed out 1, 2, 3, 4, 5, 6, 7, 8. On the 9th day, we started to basically turn around from it. Basically, it was a 9-day reversal from the bottom. Okay. And then from there, we started to come back down again and we pulled back about 22%. And then from there, we went sideways for a bit before we started in an upward trajectory that finally broke above the 200 weekly moving average. Now, from the point of the bottom to the time we broke above this 200 weekly moving average, it looks like it was 109 days. Okay. And that moving average was pretty important to basically send us into some significant bull territory, at which point we drove the price up. Now, the price went all the way up. This was a legitimate bear market rally for the most part. We never broke new highs, and we got it looks like we got about 300 and let's see, where this is. Yeah. So we came up to here, we got about 30, close enough to 33% from this low. Okay. And we went up about 33%. And from here, that was not enough to break up into a new high. So we came back down, okay, from that point. and then broke way below the 200 weekly, or the 200 daily moving average, or the 200 moving average on the daily chart, excuse me, and basically came all the way back down to where we started. So this whole thing was just a big market maneuver, and then we were right back to where we started until we started our ascent into the halving, and then away we went into the bull market cycle. Now, if we look at the same thing happening now, there are some similarities. And the difference, however, is we've just recently broke above this 200 weekly moving average. And if this were the bottom, how much does this line up? If this were the bottom and then we break above it, that's only 66 days. So a much shorter time frame than what we were used to seeing in 2017. Then we break above this and we move up. And, people are saying, well, the bottom is in, and we're going to go up from here, and we're entering a bull market. Well, here's the thing. We can go up from here and not really be in an actual bull market, okay? The bull market is not going to come until after the halving. I'm sorry, but it's just not going to happen. That halving's not until 2024, so don't get your hopes up. But what we could potentially have is a bear market rally. People are thinking this is a bear market rally. Could be, but it's not. I don't think this is. I think this is a bit of a fluke. In my opinion, it's triggering a lot of indicators. And to be quite honest, even if so I expect a reversal at some point sooner than later. Anything could happen. We could go all the way up here, go up and move all the way up into the 45,000 range, and then come back down. And maybe then we could see a new bottom. Okay. But I don't think that's happening either. I think if we're going to see a new bottom, a higher or a lower low rather, we're going to see that over the next, over February. And I've been saying for many, many, many months that I expect to see the actual bottom of this market, not only in 2023, but ultimately by the end of February. And if my assumption, my opinion is accurate, it could be right after we peak out here and do a full retracement. And that would make the most sense to me. Okay. From there, the sky's the limit. All right. I am legitimately working on getting things situated because I want to be able to just go all in when we do officially bottom. And even before that, I'm going to be averaging in, because even if we were to move up here, if we were to do exactly what we did after the 2017 peak, well, that price went up like 315%. Okay. If we were to do that here, it would take us into new highs. We're not going to get new highs in a bear market. I just don't see that happening, as much as some people want to believe that's possible. I don't think the markets work that way. The market makers alone would stop that from happening, if I'm honest. But we could get basically a run, a bear market rally up, 30% from where we're at, and then start a correction down, and then come all the way back down here to where we started, like we saw in 2017, and maybe we end up somewhere back around 18,000. It's not a new low. We had a big, kind of a faux market system that was established, where all the market makers are really playing the swings and structuring things properly. And at some point, I'm going to dive deeper into the Wyckoff accumulation and distribution phases, because I know I was really into this for a while, and I know we're seeing some very, very strict price action as it relates to the Wyckoff system. And even according to that, and even according to like Elliott wave, the contention is that we're concluding a 5-wave pattern, and then we're going to work our way down into like an ABC retracement or something of that effect. Now, I absolutely think that's still entirely possible. Now, hopefully that helps you. I don't know. But in the meantime, I am getting things situated to start averaging in on a daily basis, okay? Because whatever we do here, I do believe we're going to come back down. Even if we were to have a bull market rally or a bear market rally, we're going to correct, we're going to come back down, and from there, we're going to go sideways for a while, is my opinion, and maybe start working our way up somewhere around Oh, February, January, February 2024 until we get to the halving. Maybe we get back into the $40,000 range at the time of the halving, and we start going sideways and up for a new bull market run. Now, I really do still, I don't know what it is, but something is telling me we've got a new low coming, and but I could be wrong. So, for those of you that are out there, and none of this is financial advice. Obviously, it's not. This is just me sharing my opinion on what I'm seeing, and I'm always right sometimes. So, I'm always trying to make sense of things, but every market is different. As much as we love to go back in history and try and figure out what happened before and how does that line up with what's happening now, there are always similarities and there are always significant differences. So we never really know 100%, and it's impossible to know. And so averaging in is one of my, I'm averaging in, and that's it. If the price goes up, it'll come back down. If the price goes down, it'll go back up. And either way, you've averaged in over a period of time. You're going to end up in a comfortable position by the peak of the next market anyway. So basically squabbling over, dips and lows and all of that, dips and peaks and so forth. It's not going to really matter that much. If I were actively trading this market, which I'm really not, I play around on Bybit. And I've got a short in right now, and maybe the short gets liquidated. I don't know. I knew the price was going to go up when I put the short in, but I'm not overly concerned with it. I'm just kind of playing with it. I'm definitely not trading with any kind of significant like trading system or anything. I keep wanting to, but I don't have the time. I just don't have the time to spend studying lines on a chart all day, every day to try and, make, 2 or 3% a day. I'm a buy the bottom, sell the top type of guy, accumulate over time, that sort of thing. I buy on fundamentals. I buy on technology I believe is going to change the world. And that's really all there is to it. Could I make a lot more by trading it? Yeah, but technically I am a trader. I am just a different kind of trader. I'm not a day trader or necessarily a swing trader. There's a name for me. I can't remember what it was. I read it in a book and I'm like, yeah, that's exactly what I do. And I'm quite happy with that. So in any case, just keep your eye on things. We could retrace from here and come all the way back down around 18.2, 18.3, at which point we'll go sideways and move up again. And I know I've said a lot in this video, and it's a lot of it could go up or it could go down, but that's really where we're at. There's no real justification to a lot of what's going on right now. And comparing it to 2017 is still a puzzle. Some of the pieces fit, some don't. We're already above the 200 moving average. We're not yet above the 200 moving average on a weekly. And that is also going to play a really big role as we continue to move forward. As to where the price may likely go in the short term. It could always come up, close above that, and come back down when we get a retracement from, a rather significant bull market or a bear market rally. But I think if anything is likely to happen, I would suggest looking at maybe somewhere around 24.5, 25,000, bouncing down into a retracement that either takes us into new lows or, takes us somewhere, maybe a 20-30% retracement from that 40 or 35 or $25,000 range once we've bounced off of that. Or we could bounce off of this 200 moving average, come back down a little bit, and then break above it. I mean, anything could happen. And the reason why this is so difficult to pinpoint after weeks, months, days, long hours, trying to study so many different things, so many different ideas, so many different trade setups, and so forth and so on, is because the market makers play on the emotions of the retail trader. And it's very different. It's difficult to dictate what's happening when half of YouTube, more than half, is saying, the bottom is in, we're going to the moon. You've got all these people basically buying in. Everybody that's starting to average in ultimately can be manipulated, including myself when I start averaging in on a regular basis. That sentiment is going to play a role in maybe making sure that we don't get a new low from here and that the bottom is in fact in. But if we get another catastrophic event like an FTX or some really draconian, crypto regulations that change the entire paradigm of the crypto space and everybody starts freaking out. There are so many different things that can happen over the next year that can send the price just spiraling down hard and setting a new low. So really, it's anybody's game from here. Trying to make the most sense of it is always a challenge. I do what I can. Hopefully this video helps you. I'm going to get back to work. I am uploading a video right now of my wife's first major salsa competition. It's a lot of fun. I'm insanely proud of her and what she's accomplished. She basically won between first and third place in the majority of her dances. It was her first big event like this. She's done competitions in the past, but much smaller ones. And this one, I mean, I think at some point she was competing against like 60 other dancers or something. I mean, it was pretty fun. I spent the entire afternoon basically welled up watching her with the utmost in pride. And I tried to cut the video and edit it so it's just her dances. It's not the entire 8-hour event. But, you know, hopefully you guys enjoy it. I thought it was a lot of fun. If you're into dance, you'll probably love the video. And if you think my wife is hot, you'll probably love the video because her outfit was fire. So until next time, guys, grow your coins. I'll see you again very soon.